Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today, we're taking a look at the Euro currency futures. Now, the Euro overall, I mean, looking at yesterday and looking at the past several days, we've had a lot of movement, but it's been kind of lackluster. A lot of the movement has been sort of back and forth, and it hasn't been very consistent. Now, that consistency that we're not really getting a whole lot of, it's not necessarily a bad thing, but it does tell us that, you know, we're probably going to end up finding more range-bound sentiment. It sort of makes sense. The market's not really getting good trends. And, well, we kind of had the same thing today. We had the overall momentum with a gap down. They gapped down underneath yesterday's low. In fact, with the open directly on yesterday's low, RTH, of course. And then they tried pushing lower. Now, that drive down, all that managed to do was get back towards around where we had that drop lower the day prior. We also had cluster support where they had a double bottom and everything just kind of stacking up on top of everything, where the buyers popped right back in again and they pushed the market back up above the prior low of day. Good sign that we are looking for a little bit of the bull side continuation. But by the time the buyers show up, we're right into the gap fill, right? We have the gap fill right here, and nobody in their right mind wants to buy way up here hoping that it goes further. They're going to be looking for a pullback. So we wait and we get a little bit of a dip lower. They try again, a little bit of a dip lower. But overall, the sentiment remains up. We failed through yesterday's low of day. We're likely going to at least attempt to get back up to the prior high of day instead. And we finally find the buyers show up right here. And that's after the sellers tried to come in once, they tried to come in again. So we have a little bit of trapping going on, and we know that sellers are likely stuck. This big bull candle is going to have a lot of sellers with their stops above that high, so we're looking for continuation to the upside to drive the market back through, take out their stops, and finish off the move to the upside. So it took a while before you got that first opportunity of the day that looked halfway decent, but once it did, it allowed some pretty solid movement. Now, with that big breakout candle to the upside, we tap the highs right there and get their stops taken out, and we turn back down to the small bear candle. Now, psychologically speaking, when you just had your stop taken out and then you get another bear candle right after, you're immediately already beginning to think, okay, well, that was probably just a trap. I got suckered out of my move. I'm going to jump back in really quick, right? So they jump back in. They mark it into the sell thinking, okay, this time I got it, right? This time I got this one. This is the high of day and it's going to collapse lower. And the very next candle shoots back up towards the upside, stopping them out again. Another great opportunity for buyers to jump in and slam the market higher to take them out as well. Now, we start getting a little bit of congestion around the prior day's open, and we get hung up there. And we get a lot of resistance, lots of wicking at the top, showing that the buyers may be running out of steam. Maybe they're taking profit there. Either way, this is an area of interest, and we need to be careful buying into it because they're showing a huge amount of conviction. They come back towards it, they hit it again, and they finally get a breakout through it. See how they closed through that level? They tap above the highs, but then, instead of continuing that grind higher, it immediately fails right back in the opposite direction. So with that immense amount of failure at the highs, along with the fact that this is a three-push wedge top grinding its way up, we're in an area of resistance here and here with monthly resistance, and the buyers are showing that they're not really interested in the highs anymore. That allows the sellers to push back against them for a drive lower, just for a correction at the very least. The buyers don't want to buy this high up, so chances are they're going to want to buy a little bit lower. So this is a slightly more aggressive sell, but in context, it makes a lot of sense to try to take a sell here to drive the market down. Now, I don't think many people were expecting the reaction of this drop lower, but we went boom, 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 4 candles straight down, 5 candles straight down, massive bearish spike lower, the biggest consecutive spike that we've had all day. So likely, now the buyers who maybe are still in this are thinking, oh man, I am in the wrong side of this, I need to get out, right? It's right back to where their original entry point was, it's breaking underneath it, they're just hoping that they can get out. Any little bounce, they're likely just going to liquidate the position and say, you know what, just take me out, give me my loss, and I'll look for the next opportunity. Which means that a lot of sellers are going to take profit down here on this first bounce, but there are going to be a lot of other sellers who maybe didn't sell it up here. Maybe they didn't catch that move. They weren't that aggressive, didn't want to sell it right there, and they see the first pullback of the entire move. Right at the gap fill, support was supposed to be resistance turned support, turned resistance again, driving back down. A nice bull candle allows the sellers to sell into it and drive the market right back down to retest that earlier area of support. So just a really good example of psychology at play and kind of pinpointing the fact that, well, We have a general range bias. Where that range tends to be is kind of up in the air, since the market sort of kind of picks and chooses where it wants to go. But lately we've been seeing this a lot, where we'll get one big rally and a turn down. We go back a little bit further, we get a nice big rally, and this one just kind of went sideways. We get a big spike higher, and it goes the other way. We're getting a lot of those reversals through the day, so looking for that wedge top in an area of resistance, showing buyer's weakness, definitely a nice little move towards the downside afterwards. So that's going to do it for this one. Hopefully you learned something, hopefully found it interesting, maybe a little bit useful and entertaining, and we'll see you next time.